In this example, we're going to be using Cornerstone Exercise 930 that can be found in your textbook on page 414. We're going to prepare a schedule of cash collections. Our company is a legal service firm, and they bill their customers, so there are no cash sales. On average, the company expects to collect 20% of the billings in the month the billing is done, 50% in the following month of the billing, and 25% in the second month that's following the billing. The problem gives us May through September, and they ask us to estimate the amount of cash that would be collected in the months of August and September. From the information given, they tell us that in May, they billed $84,000 on account to their customers. Following the policy that was given, we would anticipate collecting 20% of that $84,000 in May, 50% of the $84,000 in June, and the remaining 25% in July. Therefore, it does not affect August or September, so for this problem, we can ignore the month of May. For the month of June, we billed $100,800. We would anticipate collecting 20% of that amount in the month of June, 50% of that in July, and the remaining 25% in August. So we would simply take the full balance from June and multiply it by the amount we anticipate to collect in August. Therefore, for August, we anticipate collecting approximately $25,200 of the June billings. In July, we billed $77,000 to our customers on account. Following our company policy, we anticipate to collect 20% of that in the month of July, 50% of that in August, and 25% in September. Therefore, we take the full balance, the $77,000, and multiply it by 50% to determine the estimated amount we expect to collect in August. Again, we take the full balance of the $77,000 and multiply it by 25% to get the amount we anticipate to collect in September. For the month of August, we are going to bill $86,800 to our customer on account. Following our company policy, we anticipate collecting 20% of that in August, 50% of that in September, and that would mean we'd collect the remaining 25% in October. So we take our full balance of the $86,800 and multiply it by the 20% that we anticipate collecting in August. And we do the same and multiply it by 50% for how much we collect in September. Finally, for the month of September, we're going to bill $91,000 to our clients. Following our policy, we would anticipate collecting 20% of that $91,000 in September, 50% of it in October, and the remaining 25% in November. Since we're only looking for how much we estimate to collect in August and September, we only apply out the 20% for September. We add the two columns down to get how much we anticipate to collect in the months of August and September. For the month of August, we anticipate to collect $81,060. and for the month of September, $80,850. For a business, this is very important. Cash flow is a big item for companies. We need to know how much we anticipate in receiving in cash, so therefore we can schedule when we plan to pay out cash for accounts payable and other expenses.